Welcome to Brokers Digest, a weekly webcast by The Edge Singapore, where we discover stock opportunities with you. This episode is made possible by TD Ameritrade Singapore.
Hello and welcome to another episode of The Edge Singapore's Brokers Digest with me, Amala Balakrishna. Today's episode marks the last of our 13-part series, so viewers, we have some special features coming your way. Starting with our guest for today. Joining me are two experts from TD Ameritrade Singapore, Christopher Brankin, who is the Chief Executive Officer, as well as Leonard Ng, Manager for the Trade Desk. Welcome to the show, Chris. Welcome, Leonard.
Thank you.
Thanks, Amala.
So my first question is for you, Chris. We have been speaking for 13 weeks, and this has covered market-moving announcements like US President Donald Trump testing positive for the coronavirus, Joe Biden winning the election, and more recently, news on the COVID-19 vaccine. So which announcement would you say surprised you the most?
By far, the vaccine announcement. And I say that because vaccines generally require a decade to become approved and operational. If you just look at some of the staggering stats from the World Health Organization, currently we have more than 170 different vaccine candidates, in development. We have 12 candidates that are in phase 3 testing. We have 6 that are already approved for emergency use. So that's 2 that are in Russia, 2 that are in China, and 2 in the UAE. More kind of news driving, I think you see some of these headlines are the ones that are in the US, with Pfizer, AstraZeneca, and Moderna are in their trials of phase 3. And they are looking forward to receiving some type of approval by the end of this year. So that, to me, is by far the biggest surprise in news driving things, not only for economies around the world, but for stock markets as well.
Okay, so how about for you, Leonard?
For myself, I observed the trend of the rich-poor gap widening, in which I think the poor will get poorer with the need for additional money to either get on with life, and then the rich will get richer with the boom in investments. And then the world also adjusts to working from home. That's one thing that I observe. And lastly, gold reaches an all-time high of 2089.2.
So gold is regarded as a safe haven asset. So would you say that this is a future that our viewers should be looking at this winter? So maybe Leonard, you could answer this.
So as you can see from the chart itself, we reached an all-time high of 2089.2. So the chart itself is showing a 20-year history in gold, especially for this is just COMEX gold. And then what I've especially pointed out is that we are in the same phase as a post subprime in 2008. So that exact trend line that I've drawn is in 2010. So that surge is also exceeding around 47% of gold. So during that 1 year period, which is equivalent to 2020, that is the same increase after we have seen some liquidity freeze towards the end of subprime, and now towards in fact, in the middle of COVID, that's where we are seeing global leaders pumping in more liquidity into the market.
Looking back, I find it hard to say which announcement I was the most surprised by, because there were weeks where the market saw a drop, while there were also weeks where the index increased substantially. Like last week, the 30-stock Dow Jones Index rose 2.2% for the week ended Friday, 27th November, while the S&P 500 gained 3%. Similarly, the tech-heavy Nasdaq jumped up by nearly 3% as well. For the three indices, this is a reversal from the declines seen in the week before. Market watchers have come forth to say that what we are witnessing is a continuation in the rise of optimism as the environment gets better and better. Chris, do you expect this optimism to extend to the last month of the year?
Point out is markets are forward-looking. So look, it's hard to predict the directions of markets, but the trend has definitely been pointing higher. One thing I do like to look at is less than 50% of the S&P 500 is actually up on the year. So a lot of this has been a tech-driven rally. So there are some opportunities in some sectors that we see some people taking advantage of as they roll out of some of the tech-heavy sector taking some profits off the table, and looking at in some other potential areas of strength going into the end of the year and into next year. So if you look at it, if we get some type of stimulus coupled with improving trends in the housing starts, building permits, manufacturing index, and the labor department trend continues to get better and better around unemployment, I think all these things set us up for that next bull run heading into the end of this year.
So, Chris, yeah, you mentioned that you were surprised by the news on the COVID-19 vaccine ready by mid-December. Moderna vaccine is said to have an efficacy level of around 94.5, while that for Pfizer and BioNTech reportedly have an efficacy of over 94%. Moreover, AstraZeneca has come forth to say that it too is developing a vaccine. So Leonard, I believe pharma counters is your forte. So do you think that this is our viewers should be putting their money in?
So as you can see on the front of mostly governmental purchases, there are those that are price sensitive and may not have the support structure to bring in the vaccines. So which primarily consists of the middle to low income countries. So, and there's the other group, which is like us, Singapore. It is more developed, and then the concern is more on the safety and efficacy. And then these developed countries have the luxury to diversify their vaccine portfolio, just in case one of the candidates fail. So there is still a need for vaccine resiliency and diversification to fall back on for their citizens. So from the fundamental perspectives, these buyers will execute on their purchase contracts in order for the sellers to fulfill them. So with each of the manufacturers, we look at their client list and the purchasing patterns of the clients themselves, and that will speak about their profitability.
So another in the healthcare sector that is said to benefit from the vaccine is syringe makers like Becton Dickinson. So does this resonate with you, Leonard?
Right. So this falls under the group of ancillary products. So hypodermic needles, vial makers to contain the vaccines, injection kits, and storage equipments. So when a vaccine is finally approved for manufacturing, the rush to stock up on these ancillary products will be unprecedented. So in fact, when I see Becton has already stopped the product lines like catheters and artery balloons because hospitals were so focused on COVID-19 that they stopped performing elective surgeries. So it's just that the raw materials at the same time for the syringes are commonly available and widely available. The question is now the type of volumes that are coming in that are needed when the button is pressed for the manufacturing process to start. So not all hypodermics are the same as the same for syringe and needle makers. They need to also know the nature of the vaccines before they can begin producing. One example would be the volume of the vaccines that the vial will be needed to contain, and the volume of the syringe itself.
So let's now turn our attention to the financial sector. There was an increase in the number of Americans filing for unemployment benefits last week, and at the same time, the over $3 trillion coronavirus package has largely expired. What does it mean for the financial sector? Chris, I'll pose this question to you.
Sure. Look, I mean, the financial sector is a good leading indicator for underlying economic health. One of the main plans from Biden and his administration is for infrastructure spending and to get that stimulus out to the people in America. So these two things kind of coupled together with a potential trend in an improving labor department going into 21 are all things that could potentially kind of get the economies back on track, which is why the financial sector is a great correlated area for these potential strengths. So if you believe that we're going to start getting through this next phase of the coronavirus period, is then we got to look where the infrastructure spending, or we're going to start getting consumers, kind of a little back online with some money in their pocket and maybe some hopes that they're going to maintain their jobs. That if we do, these are all things that, where the banks can kind of step in, not only from the regional banks, but from the big banks in the US. Because as we start lending and looking to spend money around the United States in terms of the infrastructure spending, this is going to be a key area where the banks could benefit from basically being driven down for a lot of 2020, as we've seen them improving as we're moving in towards the end of the year here.
So, how do you reckon tech infrastructure players like Fastly will perform next month and in the lead up to the beginning next year when the administration takes? So, I think Leonard, you can answer this question.
Right. So for this is the with the coming of quicker connectivity like 5G and AI, these technologies also use large amounts of data sets. So which means the emphasis on cloud computing is critical. So the cloud players that you see here will continue to surge as as the COVID pandemic rages through the world. It also forces everyone to work from home and play from home. The pandemic also forces and accelerates the need for digitization of businesses and also governmental bodies. So the continued use of virtualization and digitization will persist until the pandemic subsides.
Okay, so with winter just upon the US, I'm curious to see how the energy sector will play out. So, Chris, you are the expert on this sector. How do you think renewable energy counters like Jinko Solar, First Solar, and Power Platform?
Sure. So this is interesting as I look at this, and as our customers do have this as top of mind, with especially with Biden as an administration now in office, is the renewable energy space has come to more of the forefront. Uh, Now, it coupled with an increase in demand, if we do think that the economies around the globe are going to come back online, the more expensive the traditional energy prices get, especially around oil, is an opportunity for the companies like First Solar and like Jinko Solar holding companies and like PowerPlug, as these renewable energies get more sustainable, especially as the traditional energy prices are at higher levels. So it's definitely an interesting kind of the tipping point in terms of where we're headed with that. We do see our customers actively trading, not only in the renewable energy space, but also because of all the uptick we've seen in the oil prices lately, we do see the major oil companies being much more in favor with our clients as well.
Finally, 'tis the to be jolly, isn't it? Winter brings the gifting season with a Black Friday just over and Christmas around the corner. The talk on the ground, e-commerce platforms like Alibaba are better counters to watch than mortar stores like Rite Aid and CVS. What say, Leonard? I know this is your favorite sector, isn't it?
So I did a quick check. I found that Deloitte that did a survey of 1,200 US consumers, and they found that these consumers want two things in mind. One is a good deal, the other one is a safety. So these two are the top priorities. And if the retailers are able to prioritize the safety precautions for both the customers and employees, so they will most likely win. But even then, you can see from this table itself, online sales is still leading than the in-store sales. And if this pattern translates to Greater America, the e-commerce platforms like Amazon and those physical stores with a strong online presence like Walmart will perform well this coming season.
Chris and Leonard, we have touched upon key in the possible developments that may happen this winter. Before we end our session, could you both share some tips to our viewers on strategies they can adopt to navigate through the market? We'll start with you, Chris.
Sure. Look, I would tell you that our education center, at www.tdameritrade.com.sg is a great resource for this. And what we have seen, especially around the increased volatility, is some of the more popular strategies that we've seen our customers trading over the last kind of months and quarters has been option trading strategies. Now, if you are uncertain on which way the direction of the market is headed, but you maybe think that there is some room on the upside, one of the more popular strategies that we do see people doing is selling put spreads or selling puts, meaning that you are net bullish kind of type of position, but you do have some type of defined risk. If in case that your prediction is not correct. Now, on the flip side of that, if you do think markets are getting a little bit toppy and we've had this unbelievable run over the last few months, to kind of either put some protection into your account, you can either sell covered calls or you can sell a call spread on a position you don't necessarily have to own. But I will tell you that those are some of the more used strategies, especially in times of high volatility like we've had over the last few months.
What about you, Leonard? What tips would you like to share?
So with the volatility that might be coming in, so there are tons of short-term opportunities of market fluctuations that you can pick up from. So what we have at TD Ameritrade, we offer futures, and especially we do have the micro version of the E-mini futures, so that we can also profit from the small fluctuations in prices in terms of the view, also from in terms of being a very capital efficient product. This is a way to also use the products that we offer.
With that, we have come to the end of this week's Brokers Digest and this third part series. Gentlemen, thank you for sharing your tips and insights on the market. To our viewers, hope these strategies help you in your investment decisions in the short term. For more analysis on the stock market, you can visit TD Ameritrade's Education Center that mentioned earlier or the Edge Singapore website. You can also sign up for our year-end forum happening this Saturday, the 5th of December, for more in-depth analysis of how the US market will take shape in the medium and longer term. Chris will be speaking then, so you should definitely out. So I'm Amala Bashna. With me is Christopher Brankin and Leonard Ng, and we wish you holidays. Take
Cheers.
care.
Bye bye.